It was all good news when Rivian Automotive went public in November 2021 with its hyped-up deal with the e-commerce giant Amazon. After an unexpected significant loss of $25 billion for its fourth quarter and a slash in its vehicle production, we'd like to know if the company is up for substantial improvements or if an EV-dominating Tesla will remain the #1 electric vehicle company. Let's look inside Rivian stock. Will Rivian surpass Tesla stock? Perhaps the first advantage Rivian has is that its demand is always relatively high in the EV industry. Per Allied Market Research, the global EV market is forecast to be worth $824 billion by 2030. Bloomberg NEF also projected that global electric car sales would climb to $66 million, up from the $3 million recorded in 2020. High demand is an advantage to the EV space. However, it is not enough for Rivian to deliver on its in Q2 this year. The company produced 4,401 vehicles. Stiff competition from all over, whether it be electric car makers like Tesla and Lucid Group, or traditional automakers like Ford. As more companies go into vehicle production, it gets harder for a business to maintain its profitability and generate positive cash flow. One such competitive company is Tesla, and in a bit, we'll discuss the company's dominance in the market and whether this is likely to persist for a while. We don't think Rivian will surpass Tesla anytime soon, because as you have seen all over the news, the company is currently not in a good space. In its second quarter alone, the company endured a net loss of about $1.7 billion, much more significant than its $580 million net loss in the same quarter a year ago. Management has also hinted at the fact that the company is likely to suffer a more comprehensive loss for the full fiscal year than the previous year. Despite its strong cash position, the company is swiftly burning through its capital, ending Q2 with a free cash flow of negative $1.6 billion. What do you think of Rivian's net loss? Is there hope that the EV company will bounce back anytime soon? Tell us what you think in the comment section down below. The world's largest EV firm, Tesla, is unshaken in its market dominance. Established in 2003, analysts have projected that although new EV competitors are entering the US market, thereby decreasing its prominence, the US market is still heavily dependent on Tesla. Tesla's order has increased significantly in several regions of the US because of recent spikes in gas prices. Output has been boosted, and more expansion is still expected in the United States. In the second quarter of 2022, Tesla earned $2.3 billion in GAAP net income and $2.6 billion in non-GAAP net income. The company has also boosted output at its Gigafactory in Berlin-Brandenburg, producing over 1,000 automobiles weekly, while maintaining a positive gross profit during the quarter. From its Austin facility, the EV maker delivered its first vehicles equipped with 4,680 cells and structural rechargeable batteries to clients in the US. The company's energy sector also made significant strides with increased volume and superior unit economics, leading to an all-time high gross profit. Demand for Tesla's storage items continues to outperform the manufacturing rate. What are the forecasts for both companies? Subscribe to this channel. Let's find out what analysts are saying shortly. Now let's make some balance sheet comparisons. Rivian's entire assets were valued at approximately $15.7 billion in the second quarter of 2022, with its total non-current assets valuing $4.4 billion. Total current liabilities were $1.7 billion, while its total non-current liabilities were $1.4 billion. On the other hand, Tesla had its quarter-end cash equivalents, and relatively short marketable securities growing by $902 million sequentially to $18.9 billion. This increase was driven primarily by the free cash flow of $621 million, slightly offset by loan repayments of $402 million. As of Q2, Tesla had converted around 75% of its Bitcoin transactions into fiat cash. These conversions added $936 million to the balance sheet in the second quarter. So, what are analysts saying about both companies? According to the 15 analysts who provide 12-month price estimates, Rivian has a consensus price objective of $50, with a high estimate of $83 and a low estimate of $27. The median estimate is up 3.61% from the previous price of $32.55. Tesla's 36 analysts who provide 12-month price projections for Tesla have a consensus target of $1,000 with a high figure of $1,580 and a low estimate of $250. The consensus estimate reflects a 12.36% increase over the previous price of $890. Tesla has maintained a stable buy rating due to its outstanding performance in the first half of 2022, achieving higher sales and net profit. Rivian is not mainly in a good place right now, and we can only hope that in the next 5 to 10 years, the company will be where Tesla is today. Rivian shares may not have the phenomenal returns Tesla has today, but the company has a good base of orders. Check out our video on why you should stop investing in Rivian stock, the fall of Rivian stock, for more. We'll come your way again. Enjoy the rest of your time.